What's Making Headlines? Your weekly wrap-up of the biggest news stories in the Australian mortgage and finance broker market.
Hello, welcome back to What's Making Headlines. It's your weekly wrap-up of the news here with Annie, Will and Ben. Gents, how you going? Will, how was your week?
It's been good, yeah. How's yours been?
It's been good. It was my birthday this week. So
Happy birthday.
Thank you very much. I had Monday off, went whale watching. It was a perfect day for it. It was 27 degrees here in Sydney. Saw loads of whales or dolphins. And you guys very kindly continued all the news and the content for The Advisor in my absence. So thank you very much for that. Ben, how was your week?
Yeah, good. I feel like we've had every imaginable type of weather in Sydney, from normal sun to winter to
Flash flooding.
Yeah, flash flooding. So
Yeah.
that's been good.
That is true. That is true. We've had like a real kind of smorgasbord, like not only a freak heat wave at the beginning of spring, but also one of the wettest days in September for like 170 years or something like that. So yeah, it's been interesting, but we've been managing to keep calm and keep the things running here at The Advisor, being indoors and staying on the ground, keeping our ears to the ground as well for all the news stories we've been writing this week. One of the big ones that happened this week, I think, came from Finsure, looking at the payroll tax case again. I mean, I feel like this has been going on. It actually has been going on for years. But the Finsure court case is going to be coming up before the end of the year. I'm not sure if they actually have a specific date yet. We did ask them. But because it's coming up, Simon Bednar, the CEO of Finsure, actually wrote an open letter talking about what he thinks payroll tax will do to the broking industry. And he did not hold back his punches. He was saying the risk from payroll tax is actually greater than he expected, and really kind of flagging that this could be a major problem for the mortgage broking industry. I'm just going to read some of the open letter out to everyone in case they didn't see it. In his open letter, which he published on Wednesday, Simon Bednar said, and I quote, "As we continue to prepare for our case in the New South Wales Supreme Court against the application of the payroll tax system by Revenue New South Wales, I'm concerned that the mortgage broking industry may be at greater risk than I first imagined. While I believe our position is strong, our investigation has led us to review broker contracts across the country, where we discovered clauses which stipulate that brokers must adhere to the aggregator's explicit instructions. Terms that limit broker autonomy or substitute their independent judgment with an aggregator's operating rules place them at risk and creates an impression that brokers cannot run their business with genuine independence. The lack of flexible fee options for brokers to pay for the services they receive from aggregators, especially imposing high commission split plans and not offering flat free subscription, takes away a broker's independence. I worry when I see clauses which restrict options for brokers and force them to abide by an aggregator's operational framework. That's not how brokers should be treated." Now, I'm assuming he's talking about these clauses and models that aren't part of Finsure's model. I think there's a little jabs there at other aggregators and brokerage groups in terms of the clauses there that he's calling out, because I think it would be weird if it was him saying Finsure's own clauses are not treating brokers properly. So I imagine this is just him having little barb points at other groups. And we already know, like, some of the groups that have already gone through Revenue New South Wales challenges include Loan Market Group. And in that case, the Supreme Court actually sided with Revenue New South Wales. So we know that revenue tax currently is being applied to the broking industry, and these challenges are saying, well, which models should they apply to? Currently, we know that Loan Market, which was the brokerage model, there's sort of nuances in this, but generally the brokerage model, the court said, yes, you have to pay payroll tax in this situation. The Finsure case, though, is interesting because this is wholesale aggregation. So this is what everybody else pretty much is looking at. So all the wholesale aggregators like AFG and Connective, Finsure being the big ones, really sort of saying, what does it look like at the contract agreement between the aggregator and the broker? Are they basically a contractor? Do they have to abide by certain rules, which is what Simon was talking about in his open letter? But he also went on to kind of say, you know what, competition is really at the heart of this industry. And if suddenly all of the aggregators have to pay millions of dollars of payroll tax, how are they going to survive? And I think for big groups where they have thousands of brokers, they could potentially deal with it. But I think what Simon was sort of saying is really there are various models on offer, and some of the smaller ones won't be able to cop the charge for this. There's not that much money in aggregation. So how do we deal with it? So this will be really interesting as it continues on. We know that New South Wales government is currently looking at the payroll tax issue. They had some hearings on it earlier this year. There will be another hearing in December, they recently confirmed. So that they're looking at how this really impacts competition, but also where else it's sort of taking effect. And we know, weirdly, allies are coming out from Uber because they're also having the same application of the contract law applied to them and their drivers. So Revenue New South Wales is suggesting that Uber has to pay payroll tax on all of its drivers, and Uber is saying they're not employees. Why are we paying payroll tax?
Uber drivers are independent contractors, aren't they?
Yes. Yeah.
That's interesting.
So, I mean, similarly, you can kind of argue so's a broker because especially if you're using an aggregator, I mean, technically you're being paid by the lender, even though the aggregator is kind of aggregating that commission. Like, should lenders start paying payroll tax on broker commissions if that's, where the money's actually coming from? It doesn't make any sense. Doesn't make any sense.
It'll be super interesting to see where it all lands as well. And I guess particularly for the, as you were saying, sort of the smaller and sub-aggregation groups, what does that mean for their business depending on?
Because I think in the loan market case, I remember talking to Sam White when that was coming out, and I can't remember exactly the dollar amount, but let's say it was around $10 million they were having to pay. And that's both in back tax, but also I think in penalties. And that is obviously a massive amount of money to find. And Sam was saying they weren't going to be charging brokers for that back tax. But moving forward, they're going to have to look at how do we actually pay this tax if we have to pay it, because that's quite a bit of money. And either they'll have to start charging the broker for it, or, they'll have to take more of the commission, like retain more of the commission to pay the payroll tax. It's really interesting. So lots of questions being asked about what does the industry do here? How on earth do we survive this? Because if Revenue New South Wales takes this position and suddenly starts getting tens of $1 millions from the broking industry, pretty much every state will want to have another chunk of the pie. And that, again, they just can't afford to do that. So it could put the whole industry under threat. So it's a big, big problem at the moment. I know payroll tax is probably not what everyone loves to talk about, but, it's a really important issue. And I'm sure lots of aggregators will have lots of education and training. We know the association's also doing a lot here on the payroll tax issue. So yeah, lots to come down through the track, but really interesting seeing that open letter from Simon Bednar. If you haven't read the story and the open letter, you can find the link to it in the story on The Advisor. I'd definitely recommend you take a peruse and read it in full. Payroll tax, who knew that was going to be such a big thing? And who knew we were going to have such allies in Uber as well, talking about, what a real contractor actually is, whether they're bona fide or not. We're going to take a quick break here. When we come back, we'll be talking about some of the other big news this week. And it seems to be all about redundancies, job losses, and branch closures. And we'll get into that just after this message. So at the beginning of this week, major bank ANZ made headlines, not just from industry press, but across the board. Everyone was talking about it because they put out a statement saying they were going to be basically shifting focus on priorities. That is a quote. And looking at changing the way the bank is structured. And as part of that, we'll be basically letting go 3,500 employees in the next 12 months. Also cutting about 1,000 engagements with consultants and other third parties. So a huge amount of job loss going on at ANZ. Now, obviously, this has caused outcry across the board. People saying, why is this happening? What are you doing about it? But also wanting more detail, like who is impacted. This was really announced this week, and it seems to have been kind of filtered out quite quickly. So we've been seeing lots of things on Reddit, people talking about it. We've seen lots of things on social media as well, people talking about it. But obviously, that's a huge amount of change, 3,500 people impacted. And I think the biggest question for us is being like, well, where are they going from? Now, it seems that it's mostly in the kind of retail bank space. And it's probably worth noting as well that ANZ Group has the most amount of staff of any of the big four, even though it's the smallest retail bank. So it has something like 42,000 people employed there. So that's a big chunk of its workforce that they're letting go of. But looking at departing these people by September next year. So pretty quick turnaround. And this is all part of the new strategy by the new CEO, Nuno Matos. Ben, Will, we were all talking about it this week. We were doing lots of research for it. What were you guys seeing? What were you hearing? What do you think?
what I guess the release, there wasn't loads of information in there.
Yeah.
Actually, just the number is massive when you think of it's almost a tenth of the bank they're letting go, which is huge.
Yeah.
And then the CEO, I think he joined in February or
Earlier this year,
really wasn't long ago, and he's already made a massive amount of changes.
But I think this is why they brought him in, was sort of to look at what they were doing, because they've got things like ANZ Plus, which is their digital banking platform, and that's been, let's say, slow to come out, and a small part of the bank still. They started on that years ago. I remember talking about it probably in like 2019. And it hasn't really taken off, I think, in the way they want to. So I think he was sort of brought in once Shane Elliott had retired or resigned to be like, let's look at the bank, let's look at restructuring and transforming. That is his specialty.
Yeah, there was a lot that particularly came out earlier this year about sort of the efficiency drive and what was it, keeping presentations to 6 slides and that kind of thing. So, but yeah, I guess this is the manifestation of that, the next sort of level of that. And yeah, it's a huge amount of jobs and people.
Yeah. And I think what's interesting as well is because when ANZ acquired Suncorp Bank last year, they one of the stipulations was that there would be no net job losses as a result of the merger. So a lot of the questions are being asked are being like, are these ANZ people? And are they being let go because of the merger? Is it about duplication?
Thank
you. I was going to say duplication. I was like, that's not the right word. Duplication. And if so, like, they promised that they wouldn't do that for at least 3 years. That was one of the conditions. So I think a lot of people are saying, well, what? Like, they're not allowed to do this. Where's the detail? Now, they have said they're going to have a strategy update in October, mid-October. So we'll have to wait and see exactly what the new structure looks like that they're moving towards, because we haven't had the details on that yet. We've just had the announcement about the job losses. But it did say it was making changes to simplify the bank, strengthen its focus on its priorities, and deliver for its customers. So very vague there. But this, of course, has caused a lot of outcry, being like, what happens to these people? Are they redundant? Are they actually, being replaced by AI? Like, why are they being let go? In what roles are they in? And we've seen some reshuffling as well. Definitely some structural changes, not only in some of the sort of lower rungs of leadership, but all the way up, people moving across to ANZ from Suncorp, supposedly. Lots of reports about what's happening at the bank. So lots of commentary here. I'm just going to read a quote from ANZ CEO Nuno Matos from the statement they put out. And he said, "We know this will be difficult news for some of our staff. While some of these changes have already commenced, we're committed to working through the impacts as quickly and safely as we can, with both care and respect for our teams affected." So they're doing things like offering them things like CV writing help. I mean, that would be...
It's fluff.
Yeah. I mean, great, but if you worked there for like 20 years, sad. And I think, again, he did sort of mention saying, as we continue our strategic review, we are eliminating I can't say this word. Duplication. We are eliminating duplication and complexity, stopping work that doesn't support our priorities, whatever they may be, and sharpening our focus on improving our non-financial risk management practices across the bank. So we'll have to wait and see another month, I think, before we actually know in full what the new bank looks like. But lots of rumours going around, lots of chatter going around, lots of obviously upset and intrigue around all these job losses. But one thing that made me laugh was seeing the loan market CEO David McQueen on LinkedIn wrote a column basically being like, what do bankers do when they lose jobs? Why don't they become a broker? And I was like, that's a great recruitment drive there. Exactly. Great timing, being like, you know what? If there's thousands of bankers thinking about what do I do next, why don't you become a broker? I was like, love that. There's some great opportune marketing there. Not the only bank, though, that was in the news this week for job losses. Will, I think you wrote this one for us. Who else has been making headlines?
NAB. So it might have been the day after or 2 days after they announced restructure. So it'll affect over 700 workers, and that'll include 410 job cuts permanently. We kind of spoke about the timing, and I mean, there've been a few banks that have made announcements this week, and you almost wonder if they're trying to get stuff into the news cycle to hide it under the
100% they're doing that, because I think actually the NAB announcement, often we get told from the finance sector union first, that because they have to inform them about these job losses. So often the FSU will come out and tell us these job losses are happening, and then we have to go and like verify that information. But for the NAB one, I think it was actually on the same day, but the press release didn't come out until like the following day after ANZ. So they snuck in under their kind of like medium maelstrom to then be like, oh yeah, those two, but but this was in the tech department mostly, I think.
Yeah, it's mainly tech. Yeah, tech and enterprise operations, and they just said to simplify team structures and remove duplication. So again, not a huge amount of info. I think a lot of these things, they're never going to publicly say exactly what will happen. We'll just have to wait to see.
Yeah. And I think as well, like a lot of the questions being asked is saying, like, are they offloading these jobs because of technology and artificial intelligence? Like, are we replacing human jobs with AI? And I imagine in some cases that's probably happening. But also remember, a lot of these banks have multiple arms, multiple brands. Even at NAB, they've got NAB and UBank, which is the digital lender. At ANZ, they've got ANZ Suncorp. They've also got, the business bank side. So there's lots of different arms. So it may be that there's people just doing the same job across some different parts of the group. And so maybe they're looking at consolidating that. We don't know. That's conjecture.
I did notice, I don't think any of the press releases mentioned AI. I think it's such a sensitive topic, even if it is part of it.
Well, they've all learnt from CBA, haven't
Yeah,
they?
exactly. It's a dirty word.
Yeah.
The CBA one. So, yeah, I think everyone's trying to keep their distance for a little while.
So if anyone who didn't follow that, CBA announced, maybe a couple of months ago now, that they were letting go of some people replacing jobs at AI, and then following a huge amount of backlash, actually backtracked on that. And we're like, nope, no, we're not. We love our people. So I think that's sort of one of the things that maybe the banks are like, we're not going to talk about AI anymore. We're not going to talk about replacing human work with artificial intelligence. So we don't know exactly which roles were affected. But we did ask, we reached out to our contacts in the banks and the third-party teams to be like, what's happening with you guys? Are you all still there? Haven't heard anything back yet. I imagine they've probably been told not to talk to us, but we did ask. So still don't know whether third-party teams are impacted. I imagine at ANZ, 3,500, there will be some of them. But got to wait and see. NAB, though, as well, followed quickly by Bendigo Bank. So the FSU reached out telling us that Bendigo Bank had announced a restructure that will impact 637 technology workers, with 145 jobs axed, and further cuts to 13 jobs in mortgage help. Now, I'm assuming that is the sort of like the services for customers, not for brokers. We don't actually have detail on what mortgage help jobs mean, whether that's third party or direct, but 13 jobs in the mortgage side coming out of the 145 jobs axed. And this is also following on the back of BOQ apparently cutting 200 jobs and offshoring half of its contact centre to India under a deal with outsourcing giant Capgemini. And this is, again, information that we've had from the FSU. So lots of banks looking at reducing their headcount. And it's kind of also interesting because it's going to be a boom year for lending. These banks should expect to see massive flows, large profits this year, given the fact that confidence is super high. You've got all of these new schemes coming in, rates are coming down. So they should be actually performing really well. It's interesting to see them actually reducing their overheads by reducing staff numbers.
And from just a PR perspective, if they're talking about outsourcing and AI, generally customers don't really like that. They like having a human to talk to, say if something goes wrong or they need advice. Yeah. You don't necessarily want to be hanging on the phone to, or speaking to a chatbot in particular. People generally dislike that. Yeah. So I think it's interesting how they frame it in terms of, customer service is the big thing people will be worried about, I guess, in terms of customers.
Yeah, but they're probably just thinking about what the shareholders want, and maybe to the shareholders it's a bit more palatable if consumers are just don't have a choice but to put up with that sort of thing. So
yeah, and especially if they're not making the margins on mortgages, which as we know are getting cheaper and cheaper, they're kind of looking at where else they can be getting some more fat in return for their shareholders, and overheads, reducing costs, base costs, probably one of the places to start, particularly if you've got 42,000 staff members, as ANZ do. But yeah, so sympathies for everyone who's been impacted by that. But we obviously look at with interest for next month as to what ANZ will be doing. But generally, I think really interesting seeing all of these banks looking at restructuring, shifting their costs and where they're putting money, and also looking at across the board in some cases, closing branches as well. We heard recently, I think, from the Shadow Financial Services Minister about branch closures. And this is, again, something that's been talked about a lot recently as part of the reducing operational costs and overheads. What were they saying?
Yeah, so the Shadow Assistant Treasurer and Shadow Minister for Financial Services, Pat Conahan, he sort of said he's met with major banks serving the regional areas and kind of thrown down the gauntlet on regional banking. He sort of said enough is enough when it comes to bank closures. He's spoken with the bank chiefs directly, and he sort of wants to see a credible plan in terms of how they can maintain face-to-face services and access to cash in the regions, which is hugely important. It's interesting to see what sort of comes from that, but yeah, I suppose good to see that
somebody's making a fuss about it. Throwing down the gauntlet. What is a gauntlet? Is it a glove?
I think it's a heavy sort of glove.
Is it a heavy glove?
Yeah.
Never thought about that before. When you said
correct.
it, I was like, what are they throwing?
Take that with a grain of salt.
Yeah. But talking about regional branches, again, just coming back to ANZ, one of the stipulations of the merger with Suncorp Bank was that they don't close any of the branches in Queensland, I think it was, keeping regional services open for 3 years. But there were some rumours this week, Will, weren't there, about Suncorp Bank and what ANZ was doing with it?
Yeah. So it was a report in the Australian that they were planning to shut down Suncorp Bank, and they'd already announced kind of changes to management and stuff.
Yeah, or mothballing the brand at least. Kind of not necessarily like making sure that everyone who's already with Suncorp Bank, I think they could stay with the brand, but then sort of filtering it out.
By a date in 2026, wasn't it? They said.
So I think what the Australian had reported, it looks like obviously as part of this whole ANZ strategy overhaul that's been going on this past week, I think there's been lots of like team meetings, lots of conferences, lots of chats, obviously across the board about what the banking group's been doing. And the Australian apparently had a source saying that ANZ was going to be closing down the ability to offer new home loans and credit cards and accounts with Suncorp Bank by April or May next year, and then also moving to close down the brand as well. There's a lot of detail in this Australian story, so they've obviously got information from somewhere, but we did reach out to Suncorp Bank and to ANZ's team to be like, is this true? What should we be telling our broker audience? Because obviously brokers, if they've got clients who love Suncorp Bank, they need to know what they're doing with their lender. They need to prepare. So we reached out to them to be like, is this true? And they came back to us basically being like, no. What did they say?
Oh, they said, I thought the wording was interesting. They said, we're not currently planning to do any of that.
I think they said we have not yet made a decision on the future of Suncorp Bank. So it's not an outright, we're never going to do it. But it's saying it's incorrect. It actually said it was incorrect. And they're like, we have not made a plan yet. So they're still doing their strategic review. I guess maybe we'll find out in October when ANZ announces what the strategy is. Perhaps they'll fold Suncorp Bank into that as well. I'm not sure. But yeah, so they've said we've not yet made a decision. We're still going through the strategic review. I'm just going to find the actual quote from them because I don't want to butcher what they've said and put words in their mouth. But hang on a second. Reports in the Australian regarding the future of Suncorp Bank are incorrect. A review of our Suncorp Bank integration plans remains underway, and ANZ has made no decisions regarding the future of Suncorp Bank. ANZ is firmly committed to meeting our commitments to the federal and Queensland governments, including maintaining regional branch numbers throughout Australia and no net job losses in Australia as a direct result of the acquisition. We're proud of the strength of the Suncorp Bank business and focused on supporting its ongoing success. Now, we know Suncorp Bank is well liked in the broker channel. We're from the most recent Broker Pulse survey that was for the July edition, for example, for the month of July, conducted by our research house, Agile Market Intelligence. They found that it had a broker NPS score of plus 51. It was used by about 14% of broker respondents in the month of July. So pretty good number for a non-major bank. But also looking at the September edition of the magazine, out now, the cover story is about what brokers think about non-major banks. And we found that actually Suncorp was in the top 5 recommended non-major banks from the broker channel and was the 8th ranked lender of all lenders in the annual third-party report 2025. So I think that report covered almost 40 lenders, and Suncorp came 8th. So doing really well So it would be a big loss if they actually do close that brand. Hopefully they'll retain some of the knowledge and the staff and the people that brokers know and like so well. I'm going to take a quick break here, but when we come back, talking about some of the new products that have been launched this week, some tweaks and changes, and we'll get into that just after this. So one bank that came out this week with a new product was Great Southern Bank, as they launched a longer term mortgage, which had some people talking. Will and Ben, 40-year mortgages. What do you guys think about these?
I guess I'm probably coming to the end of the age group where that would make sense for me. But yeah, I suppose for first-home buyers who've got the capacity to service it, and they
First-home buyers who are young. Yeah.
First-home buyers who are young, yes.
No offense.
But I guess, we're probably all living older and working for longer than ever before. So, in the right situation, it could make sense.
I wonder, is there an actual age limit? I'd imagine there must be, because if you're a first-home buyer, I think most first-home buyers now are in their 30s. So if you're just getting
it's 40.
40 is the
so
limit?
18 to 40, yeah.
I just sneak in there. So looking at, if you're 40, taking out a loan until you're 80.
Yeah. They do say, to be fair, they don't expect most people to go all the term of 40 years. But
so why do it if they're not saying they expect people to have
More
money? I assume if they're kind of saying by having a 40-year loan you can service, because you're stretching out that serviceability over a longer period. But the expectation is you kind of take out that loan and then you refinance.
Yeah, I think
later.
so.
Yeah, because I'm sure I'm curious to see how they actually service that if you're saying, well, it goes out to when you're 80 and you've retired, assuming you've retired.
It's a solid effort if you can keep up repayments for 40 years.
Expensive.
Credit to you, but yeah.
And it is expensive. I mean, we know like the Great Southern Bank are not the only lender to have launched 40-year loan terms. We've seen a few people do it. I think Pepper did it last year. And a couple of other sort of non-major banks and non-banks also have 40-year loan terms.
Yeah, in the story where we covered this one, they sort of cited research that from the lender, which said almost a third, 29% of Gen Z and millennials would consider taking a home loan for 40 years if it meant lower repayments. So that's probably another part of the use case as well that they're thinking about. Yeah,
and I think it also kind of makes sense here in Australia because, as we know, no one has a loan. Well, very few people have a loan that they don't touch for the whole time they have it. Unlike, if it was a fixed rate loan or something where you kind of just leave it alone for a few years. We know here the average loan term is something like 3 years. So you kind of are always looking at, do I have the best rate? The broker's obviously looking at, is this still in your best interest? Really reviewing a loan a lot. So we kind of know that even though it's taking out a 40-year loan term, it's unlikely you're going to be sticking with that loan product for the whole time you have the mortgage. But really interesting to see this sort of innovation and people moving with what the market is doing.
Yeah, and we had some comments from Rolf Stromso, who's the chief customer officer, and he said, it's about sort of getting your foot in the door as much as anything and beginning that home ownership journey. He said, as their needs evolve and their earning capacity changes, they may refinance any number of times, but this is the loan that can start it all. So, yeah, I guess that's
totally. And because they go up to a maximum LVR of 90% and they offer LMI, so you could have a super low, deposit, get into market, hopefully in a few years refinance away to a loan that isn't going to be paid off until you're 80.
I reckon, I know they've cited their own research about demand from younger first-home buyers, but I would guess that, say if you're under 25, the difference between a 35-year mortgage and a 40-year mortgage, you wouldn't really care.
Minimal, yeah.
You would care about how much you paid each month.
Exactly.
I actually think uptake would be quite solid.
Yeah.
I've always interesting, I think I found 5 mortgages currently in Australia with 40-year terms, and I think they've all been launched in about the last year.
Yeah. And it's part of this whole move because of the affordability and serviceability problem. And I think actually what's interesting with the GSB one, Great Southern Bank one, is that they said there's no charging of fees for early repayments. And they're also offering an offset. So there's lots of bells and whistles here. I think they're kind of saying, we don't really want to have people penalised if they do refinance. So they're kind of saying we're almost encouraging it by not having these completing the full term early and not having any penalty for it. So I think that was interesting. But of course, we know lots of different options now for getting over this deposit hurdle, getting into the mortgage market. Ben, I think you're writing a feature in the October edition of the magazine all about it.
Yeah, I was chatting with someone the other day about it, and he says he thinks they're just going to boom in October when the sort of first-home guarantee comes in. So
expanded first-time guarantee,
Yeah.
we've got that coming up. So no income caps, no place limits. So for first-home buyer, you can kind of get access to this with a 5% deposit. We've got 40-year loan terms. We've got deposit bonds. We've got guarantor loans. There's lots of different things that buyers can do now to get into market. So expect to see a really busy year this year. Apart from mortgages, we've also seen some changes over at the SME lenders for the products that they've been offering, including ScotPack, one of our partners of the SME Bootcamp currently going on. What has ScotPack got for us, Will?
Yep. So this week they launched a new credit facility for businesses, and it, in terms of credit, ranges from 50,000 to 500k. Eligible businesses can borrow up to 150% of their average monthly sales, and they basically said this is due to increased demand for kind of larger borrowing amounts.
Yeah, so a line of credit from ScotPack rather than, I suppose, what most people think about ScotPack historically was invoice finance or debtor finance. Looking at, ScotPack now has really broadened out its whole suite of loan products. So seeing a line of credit could be quite useful for SMEs that kind of want to have that ability to tap into debt when they want it, but not necessarily be charged for it the whole time. And some people obviously don't want to take out a credit card to do that, particularly if it's for a much, much higher loan limit. So seeing lines of credit come out, really great. And then BizCap, I think, also announced some tweaks to its product range this week as well, which we heard about at SME Bootcamp.
Yes, so they have increased the lending limit by 50% for SMEs. So it was previously 5 million, it's now 7.5 million. And they again said it was to do with demand. They want to support larger, more established businesses. And when you think of the context, 5 to 7.5 million, it's quite a big jump actually.
Yeah.
Which is interesting.
Is it secured? That's quite a lot of money.
I haven't actually said, but I assumed so, yeah.
We'll have to have a look at the terms there, but going up to 7.5 million, it's quite a lot.
Yeah.
Talking about SME Bootcamp, and if you are interested in finding out more about these products and about generally writing business finance, what products are available, how you can be helping small businesses, whether you're a broker or an accountant, then do come along to SME Bootcamp. It took place in Melbourne on Thursday, but we're coming to the Gold Coast on Tuesday the 16th and finishing in Sydney on the 18th of September. It's a really great event. It's a free event as well. And it's bought in partnership with principal partner Maxiron Capital. And they're going to be there as well, talking about how they're supporting brokers and accountants in accessing finance for their small business clients. But really fantastic workshop delivered by Ascendo, our friends over there, doing an amazing job pulling apart BAS statements, profit and loss statements, being like, what do the numbers tell you? What's the narrative here? What options do you have available? How do you actually write the loans that are maybe lines of credits or asset finance or commercial mortgages? How do you write them? How do you tell the story to lenders? And what sort of things can you be doing to support your SME clients? It's a one-day workshop, I'm going to say, not an actual sort of PD day. It's a proper workshop where you actually have to do some homework. You have to do the numbers. You've got to do the number crunching. And thank you to John Scambaluri and Trent Carter from Ascendo for doing all of that analysis for us, because it's fantastic. But yeah, if you haven't already signed up for it, you can find that at smebootcamp.com.au or just go to the Advisor website, register, come along and see us in the Gold Coast and Sydney next week. Any nice plans for the weekend, you guys? Ben?
I think just catching up with some friends, seeing family. Getting out of the house.
Yeah, hopefully it doesn't rain again the way it has this week.
Yeah.
Will, how about you?
Moving house tomorrow. So
Exciting.
yeah, it should be good.
Where are you moving to?
Down the road. But we don't have, we were previously furnished, we're going unfurnished. So
Ooh, yeah, expensive.
other way around. So I've just got to buy everything tomorrow. I've got a van for the day. So it'll be good. Good when we're in.
Cool.
Yeah. What are you up to?
Well, not much. I'm planning on doing nothing.
Nice.
That is my plan. I need to go to the gym and that's about it.
Same.
Well, thank you guys for joining me for What's Making Headlines. Thank you all for tuning in. If you've seen anything, heard anything, or want to know anything that's happening in the mortgage and finance broking space, then do reach out. You can reach me at editor@theadvisor.com.au. Of course, Will and Ben as well. All of our emails are on the Advisor website. And if you've got anything else that you want to be talking about, whether it's on the podcast or at our events or in the magazine or in the news, then do make sure you reach out. We hope you have a fab week, and we'll catch you next time for another episode on the Advisor Podcast Network.
The The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the